Let's talk travel. Let's talk booking. Jed Kelly, senior analyst at Oppenheimer and Co., covering the travel space and the online booking outlets. Expedia's got earnings coming up. Let's start there, as it seems like this is one of your favorites, right?
Yeah, we make Expedia a top pick. We actually see the most absolute upside. It's the easiest name to defend. We continue to see the company is making a lot of operational improvements where their margins are increasing. Number two, we think their hotel business right now is pretty strong. We think they're going to be able to generate stable double-digit growth. And then when they report tonight, we're expecting management to guide EBITDA growing double digits, which I think will show to investors that this management team that took over in January of 2020 has actually made this a much more durable, profitable growth story. So, and the stock's cheap still. It still trades at 10 times our 25 EBITDA, below its historical trading range of 10 to 12 times. So we like it here.
All right. Expedia on the growth side, what can they do? At what rate are they growing right now, Jed?
Oliver, it's not more about the rate. They're growing about 10% on the top line, which
Okay.
is fine. You're not, the thing is, it's not like Airbnb, which is, trading at a 20x EBITDA multiple that has to show probably re-accelerating growth to justify that, right? Expedia, it's trading 10 times EBITDA. So, it's fine if it's just growing in that 10% range as long as you're getting margin expansion, right? Growth probably becomes more at a premium if its multiple ticks up a point or two. But right now, I think if you can just show steady progression, some margin expansion, along with, they've committed to $5 billion of buybacks, you can get to about $15 of GAAP EPS, and the stock's cheap on that. So that it should, we like it here.
Okay. About profitability, it's the year of efficiency. What can Expedia do to kind of fit the trend right now of cleaning up the bottom line, wringing out margins? Is there juice to be squeezed in their margin?
Yeah, you got to remember the travel companies. You've seen a lot of the tech companies announce layoffs. All the travel companies sort of cut their excess fat in 2020, right, in response to COVID, right, and they've been slower to hire back. Expedia gained a lot of efficiencies around customer service. Some of their cloud costs, some of their dual costs in their cloud, and they've been able to they've made their gross margins probably 400 points structural. So right here, it's more about just the blocking and tackling. We think they're going to generate probably close to maybe 40 to 50 basis points of margin expansion. Some of that's just coming from their non-marketing OpEx growing slightly slower than their revenue, but they've cut out a lot of the efficiencies already.
Okay. The stock still trading below the highs. It got pretty lofty there for a little bit back in 2022. Possible we close that gap, get back there?
Yeah, I think if you start to see the stock get on a trajectory to where you could be seeing close to about 4 billion of EBITDA in 26 or 27, then that would justify the stock getting past the 200s.
What's the AI stuff going to do for this space? I mean, it seems like it could probably be pretty useful in terms of like implementing, sourcing of business, of connecting, finding the best prices, et cetera. I mean, it seems like I'm sure they've already got their algorithms, right, that they're running basically, but they could put them on like hyperspeed with AI, I would think.
Yeah, they are partnering with ChatGPT. They have an AI where you're seeing a lot of AIs benefiting them right now more at the margins. They're gaining a lot more efficiencies with customer service. You should actually start to see AI improve site conversion. I think the key debate for the risk for some of these names is, is Google or maybe Microsoft being able to use AI where the search engines are able to extract more economics from this travel research function, which I think Google was a pretty big was a hindrance to profitability in 2019. But right now, what we're seeing is for the online travel names, as long as you have a lot of supply and are good transactionally, AI is more of a benefit because it helps you on one, customer service, and it helps you two on site conversion.
Okay. So it sounds like they're in the right, path for that. They're on the highway of change, if you will. Okay. It's better to embrace it, right, than get pushed around by it. Booking versus Airbnb and Trip. To me, it seems like TripAdvisor would be the one most at risk from AI because I can literally just plug in, plan a vacation to, wherever for me. And I tried, and it does a pretty darn good job.
Yeah, I mean, I think, and you've seen that with TripAdvisor. I think you've seen that in the multiple, right? TripAdvisor used to get a double-digit EBITDA multiple. It's now trading 8 times. So I think a lot of the AI risk is baked in for TripAdvisor. Yeah, they are the one company that's most at risk. They're trying to do their own trip planning tool with AI. They do sit on a ton of data, but we saw Trivago. They reported the other night, and they're seeing a lot of competition in performance marketing. So, if you were going to handicap in terms of on the research, who's going to benefit the most from all the AI implementation, it's probably Google, and that's not so good for TripAdvisor.
Okay, well, we got your last one, Jed. Let's talk some Airbnb. As mentioned earlier, still kind of the one of the few growth engines here. They've got a few products that they're trying to, add on around the edges to make the experience more interesting. Very close to a 52-week high. What'll make or break this stock in your mind?
I would think top line growth. I think I think the street right now, it's interesting. I think the sell side's probably looking for about 11, thinking they're going to guide 1Q room nights about 11%. My sense is the buy side slightly higher. From what from our conversations with investors, I think third party data is sort of pointing people to probably, them guiding room nights, 13 to 14%, which, would probably point to some type of, reacceleration or stable with the 4Q nights. So that's what I think is being priced into the stock. And then the other thing that's also positive is, last week they announced that they're increasing the fees for cross currency transactions, right? They're gonna increase the fee 1 to 2% on travelers. But what that points to is the underlying take rate levers that Airbnb has, both on the host side and both on the traveler side. When you sit on all that unique inventory, you're only charging the host a 3% commission. They do have more take rate levers that don't require a large pull forward in demand, and that can be very accretive to the margins in a very quickly.
So they got some leverage in there that they can apply. That should be good for profits.
On the commission rate.
Yeah, okay. Fascinating. All right, nice. Jed, thanks for the details. Good stuff. Love talking about this sector. Appreciate your help.
Thanks, Oliver.
Absolutely. Earnings all ahead. Jed Kelly, senior analyst at Oppenheimer. Expedia up, though, the first, and coming into it with the 1% rally tonight after the bell. Airbnb a little bit further out. Going to get that next week. Thanks, Jed Kelly.